Hi there, welcome to our look at the upcoming Monday, September 22nd trading session. In front of you I have the economic calendar. Extraordinarily light calendar for the session. Quite frankly though, that's okay. The markets probably need a rest after the whole Scotland deal. So having said that, we only see two things of interest. Existing home sales month over month anticipated to come out at 0.8%. Followed by existing home sales, which is the same announcement really. This is the total of 5.18 million, will more than likely move the U.S. stock markets. Beyond that, really, we don't see anything leading up to there. The HSBC manufacturing PMI number can be one that moves the risk on risk off attitude of markets in general, so that doesn't really apply to any one particular thing. The Australian dollar gets affected by it a bit, but really it just kind of sets the tone for the next day. So with that, let's take a look at the chart. Looking at the S&P 500, you can see that later in the day we are pulling back, probably not quite ready to break out. I would anticipate a pullback here should lead to a buying opportunity below, but waiting for a supportive candle is probably the way to go. Existing home sales can affect this market, but generally that's one of those deals where it has more of an effect if it's very negative or it's missed completely. Otherwise, anticipate a little bit of a drift lower perhaps in short term. Supportive candles can be used to go long by calls, etc. As you can see, the euro dollar continues to drift lower. We're still above the 1.28 level. We're pretty late in the day on Friday as I record this, so really don't anticipate it breaking down. I would anticipate the support to come into play though, because as you can see on the monthly chart, 128 has had a pretty significant amount of support in the past. Certainly can see it on the weekly chart down here as well. So really getting long in the tooth on this fall. Think that we should see some type of support come into place soon. So really would be looking for a supportive candle in order to maybe take a short-term counter trend trade, buying calls in the euro. If we close significantly below the 1.28 level though on a daily chart, one would have to favor a move down to 1.25 or so. The British pound, as you can see, shot straight up like a rocket really after the Scottish referendum. But this return has been ugly, to say the least. And quite frankly, that has us a little bit concerned. We think the downtrend might very well continue from here. This is really bad price action. If there is any chart right now that shows just how strong the US dollar is, it's this one. So if you have the ability to buy the US dollar index, buy calls, that's probably the best way to play it. But shorting the pound could come into play. We have a little bit of a cluster here at about 162.5. I'd like to see that broken down before start buying puts. Buying calls at this point would be very difficult to do. And finally, looking at the silver market, it's pretty much broken down at this point. We're at the $18 level as I record this, but as I switch to the weekly chart, you can see we have made a fresh new low. We have a pretty massive triangle here, so really at this point in time, one would have to favor the $6 move suggested by this triangle. And if you look at 18 subtract 6, we go down to the monthly chart, you're looking at about $12 and right there at that area. So silver has now become a sell. It's not an easy sell. There's going to be a lot of noise between here and there, but quite frankly, don't see any reason why this won't continue to drift lower. That being the case, we are very bearish of silver and will look to buy puts every time we rally on the short-term charts going forward. With this though, we think that a breakdown below the bottom of the range is probably what we need to see in order to do so, or a bounce and a resistive candle above. And with that, I've taken a look at the Monday, September 22nd trading session.